Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, February 27th. Hope your morning is going well. We do got a lot of economic data to go over today, so we'll just jump right into it. We'll start off with what we get every Thursday. That is the weekly jobless claims. Last week we had a pretty low number at 211,000 people applying for unemployment. Forecasts were accounting for an uptick of 3,000 to 214,000. However, it exceeded that to 219,000. Even though it did go up 8,000, these are still uh, very low numbers here, and nobody's going to get upset about this low number, especially when they've been kind of going back and forth, back and forth. We haven't really seen a trend going upwards, and even though we've had little spikes here and there going back to around 220, a lot of times they pull backwards down to the low twos or 211 range. So, anyways, job numbers are still showing strength. GDP also showing some strength here. As you can see, the initial reporting came in at 2.1%. Forecast was calling for 2.1, and we got the second. This is came in at 2.1%. So came in no change there, and basically the final one will be next month. So we'll get the final revision next month for the Q4 GDP, and we'll see if there's any changes that will be made to this number here. Durable goods. For the month of January. So in December, we had a 2.9% increase because a lot of a lot of areas playing in defense were created the numbers here. So we had a pretty big spike at the end of the year. The government was using up their budget to go ahead and buy more planes or defense stuff. So we had a nice little spike there, 2.9%. But forecasts were calling for a negative 1% and came in much better at 0.2%. It dropped 2%. So much better than what the forecasts are calling for. Now, if you remove these big ticket items here, in December we were only up 0.1%. However, forecasts only calling for 0.2% and went up 0.9%. So we improved in these other areas here of durable goods when you take out the big ticket items that can kind of obscure these numbers here. And last but not least, we got the pending home sales. So December it dropped 4.3%. However, on January it rebounded, going up to 5.2%. So good numbers right there. People are looking pretty good. Headline news: stocks. Oops, I'm sorry. That should be down. Stocks are way down this morning. My apologies. Stocks are down, and again, coronavirus. So yesterday they did start off upwards as I did this video, and then they reversed later in the day, and settled in the red again. Today they were way down actually. Dow was down around 860 at one point. Right now it's hanging right about 466, so it's off from the lows. Where it ends up, of course, remains a mystery. But stocks are way down today, and of course, due to the coronavirus, how we're starting to see more and more of coronavirus spreading outside of China right now, and how that's quickly developing globally. So let's see how this is playing on the bond market. Bond market right now we're up about 20 basis points. We were up 30 basis points, and it's pulled back since the stock market pulled back that in half. It's down to about 20 basis points. So that still translates to improvement in our pricing. So we do have a price improvement from yesterday, which is obviously good news for those who are in the market for refinance or purchase deals here. Yields are at all-time lows. We're down to about 1.27 now. And again, we're at all-time lows right now. We haven't been down this low before. So, and this is still counting. This coronavirus is really kind of pushing things, and it is hurting the stock market, but helping out the mortgage rates. So we got a double-edged sword there. All right, that's pretty much a wrap for the day. Again, today we got some price improvement, which is good news for those, again, looking to refinance or buy. And speaking of such, if you guys are in California looking to buy or refinance, I'd love to hear from you guys. We are a mortgage lender and can help you guys out. Please reach out to me at direct message me or email me. You can see that in the red at the bottom. Email, I do respond the quickest, as I do receive those quicker than I do before I see any direct messages. All right, folks, you have a great rest of your day. Thanks so much for watching. We'll see you in tomorrow's video. Bye-bye.